For the first time in history, you can buy the biggest IPO ever at the exact same price as Wall Street. SpaceX goes public on June 12th at $135 a share, and unlike almost every giant IPO before it, ordinary investors are being invited in on the ground floor. Here's exactly how to do it, step by step, and the one catch you need to understand before you click buy. Normally, an IPO works like a private club. The banks hand the cheap shares to big institutions, and regular investors only get in after the stock starts trading, often at a much higher price. SpaceX broke that mold. It's routing roughly 30% of its shares straight to retail brokerages, Robinhood, Fidelity, and Charles Schwab, at the same price, at the same time as the institutions. It even set a single fixed price of $135 instead of the usual moving range. This is about as open as a mega IPO has ever been. And just so we're clear on what you'd be buying, this isn't a pure rocket bet. The real engine is Starlink, the satellite internet network that's become a cash machine, on top of the launch business that already dominates the world's rockets. That's why investors are willing to talk about a $1.77 trillion price tag with a straight face. For once, you get the Wall Street price, not the day one markup. So here's the playbook. Step 1. You need an account at a broker that's actually in the deal. Right now, that includes Robinhood, Fidelity, Charles Schwab, SoFi, and E-Trade. But here's a catch worth knowing up front. The bar isn't the same everywhere. Robinhood opened it to everyone, with no minimum balance, while others, like Fidelity, generally reserve IPO access for clients with larger accounts or premium status. So pick the platform you actually qualify for. Step 2. And this is the one people miss. You have to opt into that broker's IPO access program before the offering prices. It's a setting you switch on. It is not automatic. Step 3. Submit what's called an indication of interest, basically, how many shares you'd like. Important. At this stage, it's not yet a binding order. You're raising your hand, not buying. Check your broker's minimum. Some require a certain number of shares or account size. And while you're there, open the prospectus and actually skim it. That's the company's own official list of the risks, and it's the one document written by people who aren't trying to sell you. Step 4. Once SpaceX sets its final price, you confirm your request. If you don't confirm in the window, your order is simply canceled. Step 5. If you're allocated shares, they land in your account at $135, and the stock starts trading June 12th on the NASDAQ under the ticker SPCX. Account arrow, opt-in arrow, indicate interest arrow confirm. Miss one step and you're out. When trading opens on the 12th, brace for chaos. With a fixed price and this much hype, the stock could spike, or it could sag if the demand was front-loaded. Two things to keep your head straight. If you got an allocation, you already own it at $135. You don't need to chase the open. And if you didn't get shares, do not panic buy into a first-day spike. That's exactly the overpriced entry this whole process was supposed to help you avoid. Don't chase the open. The pop is for sellers, not latecomers. Now the part the excitement skips. 3 of them. Catch 1. You might not get any. An allocation is not guaranteed. Demand for SpaceX could dwarf the shares available, and the brokers flat out can't promise to fill your order. Plan for a partial fill, or nothing at all. Catch 2. The price already assumes greatness. At $1.77 trillion, SpaceX would open as roughly the 7th most valuable company in America, bigger than Tesla. You're not buying a hidden bargain, you're buying a giant that's already priced for a huge future. Catch 3. The uncomfortable history. Across the last decade of hyped IPOs, the median stock fell about 54% from its peak within its first year. There's usually a lockup that unleashes a wave of insider selling a few months in, and the day one pop is engineered for the sellers, not the buyers. I broke all of that down in my last video. Links on screen. You can finally get the IPO price. That doesn't make it a safe price. If all of that makes you nervous, there's a quieter backdoor. Over time, a company this size is likely to be added to the major stock indexes, like the NASDAQ 100. The moment it is, anyone holding a simple index fund owns a slice of SpaceX automatically. No opt-ins, no scramble, no lockup drama. And waiting a few quarters lets the company actually prove itself as a public business before you commit a dollar. You don't have to buy on day one to own SpaceX. So if you do go for the IPO, 3 rules. Size it small. Assume it could fall 50%, because for IPOs that's the normal outcome, not the worst case. Don't FOMO in with money you can't afford to lose. And remember, the goal isn't to be first. It's to be right. Quick but important. I'm not a financial advisor, and this isn't financial advice. It's a guide to help you decide for yourself. So that's how to buy the SpaceX IPO, and how to think clearly about whether you should. If this helped, subscribe. One big market question every week. See you in the next one.